Yo, yo, yo. What's going on, everybody? Musa, Mantis, Andrew. Yeah, Andrew, it's a weekly forecast, not Asian session, but Musa's already got you there. Islam. Hopefully I pronounced that right. What's up? No, you're alright. You're good. You can see the screen alright. Everything's good. Yeah, I got a new intro song. Because everything is apparently copyrighted, so that's the reason why I stopped with the previous screen, because it was being copyrighted. So it's not like I make much. I think it's like $5 or $6 each stream, but I mean, just because of that intro song, the whole stream gets copyrighted. It's kind of stupid. Hopefully this one, I'll see at the end of it if it's copyrighted, but we'll see. It is. I actually do like it. I'll have to tell my editor. Good job. Okay. Let's get into this week and the weekly forecast. I have to move a couple of these wires out of the way. Thank you. I'm going to turn this up so I can push it further away. Hopefully, if it ever goes out, the audio, if it's too far, just let me know. Because sometimes I like to push this away from my face. It gets quite annoying. So, I'm sure everybody's aware of how I do the weekly forecast, but if you aren't, we always start off with the economic calendar. We go through kind of the roadmap for the week. It's the number one thing that you want to do when you're looking at a trading week, is looking at the economic calendar, because it's going to give you what your anticipation should be for that day, for the week, your trading hours, your trading type of day, what you should be hunting for, those type of things. So it's very, very important. ICT talks about this constantly. This week we have NFP, what is the protocol typically for NFP? Well, I can tell you for a fact that you should be done by 11 a.m. Eastern Standard Time trading by Wednesday. But here's my take on it: is Thursday I would avoid. But trading, I'll give you the roadmap for this week. But you can trade NFP, but understanding you should be looking for probably the silver bullet, right? Not trading the NFP open, not trading even the open of that session, looking for the silver bullet. I've found that there's some really clean moves within that time, so we'll go through this week. So Monday is usually a very good day, especially with NFP. That's a day that you really want to be hunting. I know there's some weeks where we don't want to be trading Mondays, but Monday on an NFP week is something like tomorrow we really want to be hunting, especially going into this week. So we'll be looking at that tomorrow. Tuesday we have Jolts at 10 a.m. Wednesday we have two economic calendars, red folders. So pre-market on a Wednesday, like before even the open, would be nice. I could probably see, which I may hop on stream earlier that day if I feel up to it. If not, we can still look at the news event drivers for that day. Thursday I'll probably be avoiding and just sitting out of it. I'll still live stream, but just tape reading, and then Friday we'll come back and actually trade NFP, because the day before NFP on Thursday, things can get weird. The precision can be off. Again, timing is the number one important aspect to these concepts, and it's always time over price. Well, the economic calendar, the day of the week is time, and if price is not primed because of time due to something ahead of it, obviously you're not going to get clean precision moves. So that's something we want to be looking at and paying attention towards. So that's kind of the roadmap for the week, being aware of it. Every day has a red folder, and I'm sure obviously you're looking at the charts. We had another major gap open. Pretty wicked, man. We've had some really wild moves this year already, back to back. I mean, it's pretty wicked. So I wouldn't be in a swing position mindset right now. If I was, I'd be very scared, or holding positions over the weekend. I would be shitting my pants, to be honest with you. And that's the reason why I'm glad I'm just an intraday trader. But if you can look at your chart here on NQ, this is our gap open lower. So again, another liquidity void that is in front of us here. So much like last week, just to make note, if you're here on live stream with me on Friday, I was aiming for lower prices. I was aiming at these relative equal lows here to be traded towards, and we eventually ran them. We went a lot further than I would have thought on Friday, and obviously we gapped lower, so we're a lot lower than I would have thought. But we completely filled in that liquidity void. This is a much larger liquidity void than we had last week, but we're still close relatively towards it. Compared to last week, we were way down here. I mean, that took multiple days. That took the whole week up until Friday to finally close it in. Liquidity voids rarely ever stay open, so don't be surprised. Much like last week, we stated this on last Sunday. You can go back to it. I said this rarely will ever stay open for a long period of time. And 4 days is a long time, but that's because it was so far away from it that it had to work its way back towards it. I would believe again this week we're going to work our way back towards this liquidity void. I would not be surprised. So we'll just have to see. I mean, I know a lot of people are probably already trying to long this in here. I think that's a stupid idea, to be completely honest with you, because it's going to be much like last week, where I don't know if this thing's going to stop. I need some type of evidence to show that I would want to seek that liquidity void. Just because it's open is not a valid reason just to long it. I don't know if that's the bottom, and I'm not trying to, catch a falling knife. I think that's very, it's just gambling, right? This thing could just keep moving off lower, and if it does, then it is what it is. But let's look at, I don't know why I'm on the micro. I'll have to switch over to the actual contract here. The daily time frame is an absolute mess. We're still in the micro. It's an absolute mess, man. It looks like a 5-year-old drew on a piece of paper. As far as a narrative goes, and on a higher time frame context wise, I mean, this is it's pretty wicked. Does that mean you can't trade and there's not going to be setups and things? Of course not. But when you're looking at a higher time frame narrative, and what I really love trading in, especially with higher time frame context, is when you're swinging on a higher time frame and you're really in the flow of it. Right now, that's not the case. I mean, we're basically going back and forth with liquidity on both sides on a daily time frame, right? We have sell side beneath us. We also have relative equal highs above us. To me, anybody calling either side, I mean, you're going to end up being a genius. You're going to be the smart person. But I don't know which side it wants to pick. I have no idea. I know that there's a liquidity void in front of us here that will potentially be filled in, so I can utilize that for a bias for the beginning of the week or for the week, depending on if price gives that type of sentiment towards higher prices or not. We'll have to look at it. But it's the same thing as last week. I mean, it's a really repetitive phenomenon as far as liquidity void and filling that gap in. I mean, it's a pretty strong drawn liquidity, regardless of whatever the hell this daily time frame is. It's at least still a bias, something I can go in the week and say, look, I'm probably going to be looking for longs into this if I see the setup towards it. That's just if it doesn't, obviously I'm not going to push it. But regardless of what we're doing in here, I mean, we've been stagnant sideways for over 2 months now within this daily time frame, higher time frame. So if you're having a difficult time trading, I mean, again, you always have to look at, when you're journaling and reviewing your performances, if you're seasoned enough, you also have to look at, well, is it the technical side? Am I in a really difficult technical season where price action is maybe aimlessly trading? It's doing a lot of back and forth on the higher time frame. It's not directional. Well, I can clearly logically say, well, we're really not moving in a very one-directional phase on the higher time frames. And what does that make lower time frames? It makes the lower time frames much more difficult to trade. Can you still trade them? Of course. I'm not saying you can't. But when you're on those higher time frames and when you're in those swing points, when you're swinging in a higher time frame, man, is it fun. It's easy because you're just aiming towards one higher time frame objective. You're staying on point with it over and over again, week after week, until it's achieved, and then you lay off of it once it's achieved. And in here, we're just sideways. So if you're having a difficult time, obviously you need to identify that. Say, look, I need to lower my risk. I need to lower my frequency, lower my expectations, things like that. Again, that goes back to journaling. When you're looking at it, say, okay, is this psychologically? Is it my performance on my emotion side, or is it technical? And sometimes it's both. Sometimes it's just one. But it does help to review that. So let's go out to. I'm not going to start with that. I want to start with dollar index. So go back to last week on dollar index and what I was reviewing on it in the last few weeks here. And the reason why we pay attention to this is because it's an inverse correlation to NQ. So looking at dollar index, we've dropped down into this buy side imbalance, into this down close candle, which is your bullish order block. And this is also a mitigation block here. So there's about 3 PD arrays there, whichever one sticks out to you the most. I mean, you can utilize that, but I see 3 of them. We drop down into that, we utilize that to move higher away from it. So some really decent price action as far as the bullish side. And if we fully close above this sell side imbalance, that's where I'm going to be very bullish on dollar up until this high here from 2022. So we'll see how that looks going into this week. Again, daily time frame, we dropped into this buy side imbalance here. This would be your mitigation block. We dropped down into that, which is inside of a discount relative from the stealing range low to high there. There's your equilibrium. We drop down into it. Now we're expanding away from it. So if dollar index is moving higher, how do we utilize that? Well, that would be showing us, or at least tipping its hand in terms of intermarket relationships, that we should be looking at potentially lower prices in NQ, right? That should tip its hand, especially if dollar is really moving in a manual, a fashion where it's really moving higher. I have to look at the idea of looking for lower prices in NQ. And if you're in remember this, take notes, if you're in a consolidation, or if you don't really have a clear understanding as far as what NQ is trying to reach for in that moment of time, this is why you use intermarket relationships, because before NQ moves, you're going to start, or if you start seeing dollar index move, then you can utilize that to your advantage. Say, look, eventually NQ is probably going to move off lower, and I'm utilizing that to my advantage because it's tipping its hand to me. It's saying, look, I probably should start looking for lower prices in NQ. Obviously, you don't want to just guess and push it because of that, but you should start getting that information from it. That's why I utilize bonds, yields. That's why I utilize foreign exchange. We utilize SMT. If all of those things are in agreement to point to lower prices in NQ, then I should stick with that. And if it starts proving itself really to me, then I start really pushing that idea on it. Right now, NQ is stagnant. Currently, we have the liquidity void. But if we really start seeing, if we fill in the liquidity void and we start seeing collapse, start pushing bearish prices on it. Because if all these things are in agreement, that's pretty damn easy to me. Bonds, still relatively lower. These aren't moving in a huge fashion, bonds and yields, but they're still relatively, bonds are still relatively higher, bonds are still relatively lower. So bonds are correlated with futures, or NQ, index futures. So you should be looking at bonds saying, well, bonds are going to seek lower prices, and I should expect NQ to do so. If I see yields going higher with dollar index, I should be expecting lower prices in NQ as well. Another correlation would be foreign exchange. We'd be looking at Euro USD, which is basically completely inverse of dollar. And if we start seeing, we have a gap lower on Euro. If we start seeing this really collapse lower, and we see this get underneath the buy side imbalance on the weekly time frame, then we can really start looking for these lower prices in NQ. Same thing with pound dollar. This is moving lower. Aussie dollar moving lower. New Zealand dollar moving lower. So what is this pointing towards? Well, all this to me right now is pointing towards lower prices than NQ. Like if I really had to make a higher time frame standpoint, like, okay, we're going to, next few weeks and months here, where are we going to be ending up? Where should I be expecting price to draw towards? I'm going to be expecting lower prices. But CJ, there's relative equal highs here. Well, you can leave those if you have intermarket relationships on your side. If we go over to ES and there's an SMT there, that is most definitely going to support the idea that those relative equal highs can be left. I don't need to look at that and say, well, that liquidity needs to be swept before I start looking for shorts. No, I don't. All of those things are pointing to me to say leave it. It doesn't matter for now, especially if all those things are on my side. These are things that ICT is taught, but nobody likes to utilize them. They like to just look at 1 minute models and, just plug in a macro and just click buy or sell. This is to me being a well-rounded analyst, and it doesn't take a whole bunch of time. It's just repetition of doing it every single week. Not every single week are you going to have intermarket relationships and agreements. You're not going to have SMT and agreements. Sometimes it's cloudy. It's hard to read. But some weeks where you can really start to see things unfold and they're all in agreements, it's really, really fun to utilize these things. That's why I go over it every single weekly forecast for the ones that pay attention, because they give you a whole wide perspective on how to look at NQ and how to go into a session and how to go down to a 1 minute time frame and how to go down to a 15-second time frame and trust a model. Do you see that there's much more framework than just understanding a model. You need to understand all of these things so you can go into a 1 minute time frame within a certain period of time and trust it. Otherwise, to me, you're just driving blind. And again, utilizing SMT is what I'm always looking at on a higher time frame. When I'm looking at narrative and I'm looking at bias, especially with NQ, what do we have here? Well, yes, do we have relative equal highs? Sure. But what did we print at that high up there? Well, look at this high here on Friday, the 24th of January. Look at this high here, well, 22nd, 23rd, 24th here on NQ, and same thing with ES. Is this high from Thursday, December 26th, is ES making a higher high here? Yes. Did NQ make a higher high at that high there? Right here. No, it did not. It made a lower high. So what is that telling you? That's a bearish SMT divergence. Now, at that moment of time, it's not very meaningful. But when you start to see evidence towards it, that starts becoming meaningful. And especially with the things that I've just discussed, it starts becoming even more meaningful. And especially when we're working away from the relative equal highs, that gives me even more evidence and even more confidence to say, look, I don't need to expect that to be traded towards. And that's the reason, again, even looking at the technical side, we filled in that liquidity void. We worked off of the volume imbalance the week prior as well. And we saw that collapse lower on Friday, and even now this gap lower. So if anything this week, we fill in the liquidity void, maybe partially, or the full thing, and then we see the collapse lower, where we start working towards the lower levels that I've been potentially suggesting over the last coming weeks and months, where we have relative equal lows resting underneath us on NQ. We have it down here. ES has the same relative equal lows. We have dollar index moving higher. We have bonds and yields in accordance. We have Forex in accordance. We have SMT on the higher time frames in accordance. These things, again, are what I'm looking at to gain a perspective and understand what price is trying to reach for in terms of a drawn liquidity, which is our magnet. That's the first thing I'm always trying to look for in prices. What is it trying to reach for, and why is it trying to do that? What's the evidence for it? Some weeks I have things really stacked in my corner, like I have right now. There's a good deal of evidence. I just need to start seeing the proof for it to really start executing and really trusting it. But based off of what I'm seeing currently in this moment in time, I'm leaning towards lower prices overall. Maybe in a few days, we're going to see really lower prices. For now, this liquidity void above us, since we're so relatively close to it, I believe we'll probably fill that in and then see the collapse lower. So hopefully it makes sense. This is like, to me, I love weekly forecasts because people always ask me what my model is or ask me what I'm looking at. Well, the weekly forecast gives you a great perspective towards it. And obviously looking at the live streams in the moment of time, that also gives you a good perspective because I'm utilizing a lot of different things. But this is the wide view of it, the bigger picture view, and how you go into these lower time frames and trust it. I've done this every single week for the last multiple years, and that's what's helped me. So, hey CJ, can you mark the LV, which is on the upside? LV, liquidity void. Yeah, it's up here. So that here, this liquidity void there from last week. This is your volume imbalance as well. Extend that out in time, so that's here. And you can see the bodily closure we had on Friday and even the weeks before that. And within that, you also have this. This is your sell side imbalance here. So there's a few things there last week that supported on Friday lower prices. So sell side imbalance, you take it from the volume balance to the high there. You have this volume balance, you extend it to your right, and the liquidity void. So hopefully that makes sense. Hopefully I didn't lose anybody. If I did, I'd go back and rewatch it because that to me really gives you a perspective on how to read the higher time frames. If you don't utilize any of that, I think you're just doing a disservice. It doesn't take a whole bunch of time, and I don't think it confuses you anymore. It can for some people, but it's just burying your head in the sand. If you have the information, and ICT has taught it, which he has, and even if you want to throw seasonal tendencies in there, you most definitely can. You can go to seasonal tendencies, which is, I forget the website. I don't utilize it, but ICT has recommended it. Seasonal tendencies, where you can look at statistical data, tells you the seasonal tendencies as far as dollar index and all those things and what they're most likely prone to do during that season. That to me is how you read higher time frames and how you understand higher narrative and bias. So does it make sense? Put a 1 in the chat if it makes sense to you, so I didn't lose anybody. And obviously not all of you who've been with me. I know there's a lot in the chat, but Ali, thank you. Mantis. So with that being said, now we can go into NQ and we can start looking at it. Obviously, I already kind of discussed what I'm looking for. It's not going to be a whole lot, but that is how I go into NQ and I go, okay, well, this is what I should be expecting this week. I'm also, on top of all of this on a weekly forecast, when I'm planning out my week is, well, I'm taking the economic calendar, which I first went over, and I'm also going to be throwing in my mind, which I know, the weekly templates. So ICT has on his core content, which are high of the weeks or low of the weeks on certain days of the week. So if I'm looking at bearish prices, right, well, a good statistic is on a Tuesday or Wednesday, if you're bearish, and that's my sentiment, is to be looking for the high of the week to be printed on a Tuesday or Wednesday, right? So if that is true, or it ends up being true, then I need to be looking at it saying, where would that high be printed? Where exactly would it be printed before we saw that collapse lower? So let's just say Tuesday is over here, right? Or Wednesday, which is over here, Tuesday or Wednesday. Then we could potentially see this liquidity void being traded up into setting the high of the week going into Tuesday, which we'll just kind of point it over here, and then seeing that collapse lower throughout the rest of the week. It could just take the whole week to fill in this liquidity void. We could just see it collapse lower away from the liquidity void and never be willing to fill it in. We could just run lower and take the sell side. There's a lot of different situations. Of course, I'm never married to one thing, but I have an idea. At least I have some type of game plan going into the week saying this is what I'm thinking about. If I see evidence towards it that starts playing out, then I'm going to execute on it. If I see things differently, I'll change it. Plenty of times I go into a week thinking something and it doesn't happen, so I have to change my plan. And that's just all part of being an analyst, is just being able to think on your feet and change your plan. But if things are going really well and it's all going to accordance, then just execute on it. That's why we do these preparations and we look at it and we think about it and we do the right thing. So 4-hour time frame gives a really good perspective of last week, how we filled in the liquidity void. We saw the collapse lower, never closed outside of it. We saw the collapse lower and then obviously this open here. So inside of that liquidity void is a bearish breaker. So you can extend that out in time, which is from this high to low. Then you have a higher high. Now we have a lower low. So bearish breaker within that liquidity void. New day opening gap as well at the top end of it. I can also kind of extend out this buy side imbalance, which is an inversion. So you have a few things there within it that would support a potential high of the week being formed in there. Yeah, again, that's really it. I don't need to go in these lower time frames and kind of look at it because I already know what I'm looking at and suggesting for the week. And we'll just have to see how this week plays out. I'd be really focused on tomorrow and Tuesday as like the prime days of the week, and then potentially Friday, really. So 3 days would be Monday, Tuesday, and then NFP, which would be Friday. After NFP releases and after the open and potentially the silver bullet to execute. Those would be like my 3 best days. So second week in February next week, we should see some confirmation. ICD has always said that's the week to trade. Yep. He's always stated that he's looking to come back fully trading into the second week of February. Usually January is really shitty. We saw that this year. I mean, at least I had not a really easy time. I mean, last week was really the only easier time this year that I've had analyzing the market. So it's a good point. Thank you, Jason. I think that's going to be it. Hopefully you guys enjoyed. And we'll be back here tomorrow for the live stream. So until then, take care. Have a good night, everybody. Peace out.